Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps lots. And also keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. Alright folks, here we are after market close on Wednesday, March 30th. We're going to take a look at Apple. So Apple, checking out the daily chart here, it's been a while since we've taken a look at Apple, but if we zoom out to the 1 year, we see a few interesting levels that it's been batting itself around. Now if we go way back, here this low around 138, you see how nicely that lines up with this mini gap here and the topping out that happened around 136, 137 there. So within solid range in those areas. Another consolidation that turned into a bottom here, which was previously consolidation top in this range, right around 147, 148. And then where it's seen its recent lows here, you see this wick low lining up nicely with the body tops of these candles right around the 155, 156 level, and then stretch down here to 152 lines up nicely with the topping out here in this consolidation range, as well as back here when it's topping out, and then even more recently right around 150, sort of dead center in this consolidation range, and hitting some of the tops of the candlesticks in this previous area over here. So making a lot of sense that it's coming down into especially this big sticky spot here. I'll put a big square here. There's a ton of consolidation points, right? Consolidation range in here. So something to watch, maybe even moving forward. I don't know that it'll come down this far again, but if it does, I toss a purple on here if I'm looking for it to be a potential bounce zone, a proven to be previous bounce zone, and obviously there'd be a lot of levels ahead of that, but this is just to give us sort of like a marker. And then on the other side of things, we have this stretch toward 183 that still continues to be sticky, and that actually takes place. I'd toss maybe a red box in here to show where it's been rejecting. It's really been rejecting from about here, like this 181 level, up obviously to this 183 level. So I'd put a red box in there, and just to say that these are likely for the foreseeable future are bounce lows, at the very lowest, and are top out highs. And so obviously any stretching below this purple box means that it's already encountered a ton of pain, but could see a really heavy selling off after that. But again, that would mean it would have to come down into the high 140s, or even maybe mid 140s to have that really kick into gear. And the flip side of that is if it can break through this 183 level and flip that to support, that could sort of put it off to the races to stretch to that 185 level. And if it'll go beyond, who knows, but certainly something to look at. Now in the meantime, it's stuck right in this range where we have these two levels right here, right around 178 and then 177. So this 177 and 178 range catching a lot of movement, right? It's all of this motion here, and then it came back and rejected it there, and that's when it stretched all the way down, and now it's had this gap up and it's kind of sticking itself the last couple of days in that same range. Now the question becomes for the short term here, is it going to come down and fill this gap that would take it down to 175.50, maybe 175.90, something like that, and fill that gap and then sort of have another attempt up? Or is it going to be able to flip this 178 that's been very, very sticky for it from resistance to support? You see how it got that push here, right? It had all this stickiness, sold off a bit, regrouped, came up, and was able to bounce off of that level, and that's when it made that run at 183, got rejected off, and then it flipped that 177 to clear resistance, stretched all the way down, confirmed that resistance again, sold off even harder. So this is just the importance of these levels for the time being. Now if it does come down in the interim, and I know I keep talking about downside here, and that's not intentional. I actually have a long position in Apple right now. So this is just to sort of point some of these things out that look key on the chart here. Around 171, right around here. A pretty solid level, and then right there, mid to low 168s as well. So that's what I'd be looking for chart wise, and obviously it's had this steep run up. Now if we check out where we are on the EMAs, stretched quite far from the EMAs, but the flip side of that is everything is just completing a bullish crossover. Obviously this 5 crossed over way back here, and the 12 crossed over way back here, but the 34, which is that like pinkish one, it just crossed over that 50, which is that, I don't know, I'm not good with these colors, but you see that crossover just happened here. So could it come down and sort of test, around 175, 176 to retest this 5 EMA, and or even come down toward the low, into the low 170s to test that 12? Sure. But these are fresh bullish crossovers, which could obviously be a very, very good sign. The MAs also lined up in a fully bullish formation. You see this, crazy bobbing and weaving above and below this 50 for a while there, and now it's solidly situated well above, nowhere near the 180 and the 200 at the moment. So those are all obviously very good bullish signs, but the flip side of that is the further that you buy away from, the EMAs and the MAs, the more risk you potentially take on, and therefore then maybe you have a lower risk to reward. MACD still looking like it's continuing to stretch a bit here, though it could be kind of putting in a little bit of a flat top or curving starting to happen, and possibly wanting to push back a little bit there. So keep an eye on that. The Ichimoku cloud, to toss it in here. Now, as you see, as we get into the next few days, the support gets much, much heavier. This is very thin support here. This cloud being thin is very thin support. But the support of the cloud is way down below 170. So yes, thick support there, but would be quite a bit of drawdown if it were to come down and need to test that actual entire area. So I don't know if the RSI is going to work here. Okay, so RSI at 65 right now, so relatively high, but we've seen it previous times sustain pretty high levels, right? Well above 60 there for quite some time. So may not necessarily be the be all end all, and volume still staying quite strong at the moment. Not quite as high as the push that we saw up here, but still relatively speaking, this chunk is faring much better than this chunk back here, for example. So those are the levels that I'm paying attention to at the moment. My most critical thing right now is, can we stop testing and sticking to and retesting 177? And can we just confirm 178 as support, and then make an initial run at this like wall that starts at like 181, and see if we can get into that red box and try to make our way through there. That's my hope, since I have a long position, but who knows? Obviously, I talked a lot about the potential areas of support to the downside. So we'll see how it goes. But, good luck if you're in Apple, and I hope that your trading week overall is going well. And as always, I appreciate you watching, and I will see you in the next video.